Can AI continue to drive the market gains for the second half of this year, or is this moment a sea change?
Mazza, I think we talked about this last time I was on a while back. We are advocates and very positive on the longer term outcomes of innovation cycles, and AI being what we think is one of the bigger innovation cycles that we have seen. But at the same time, historically, we've seen a pattern of hype followed by disappointment when things just don't come through and be realized on a fast enough basis as markets often expect them to be, followed by an eventual cycle of realization that's kind of further out in time. We think we're probably going to be going through that cycle. It seems like the information coming out and kind of the nitpicking of the AI is starting to inch in that direction of disappointment, where people are looking and saying, well, wait a second, how much money have we spent on this? And when are we actually supposed to get associated revenues or profits with all this capital spending? It's not unusual for the stock market to be a little bit short-minded and look at it and say, we don't like getting paid back 3 years from now for something that we spent today. We like to see profits now from things we spent now. It's not like the venture capital world. This is the stock market. It tends to reward instant gratification.
So then, Jason, what does that then further tell us about how investors should be positioned? Is it time to get a little bit more defensive, at least here over the coming weeks and coming months?
I think it really depends on your starting point. That's a really important perspective. Every client or every investor should have an idea of, like, what's my normal? What is my kind of neutral allocation on equities and bonds on different portions of the market? And then the thing that you should be doing when you have volatility like this is rebalance, don't chase. Meaning when the market's up a lot, don't chase the market up a lot. When the market's down a lot, don't chase the market down a lot. Use the volatility to rebalance your portfolio. You actually move in the opposite direction of big market moves. That's what we're advocating investors do at this point in time. That rebalancing can be slow. It doesn't have to be like every single day that the market's down, but use it as opportunities to rebalance, get yourself on target with your investment approaches, and that'll be the better longer term strategy in an environment that's like this with this sort of volatility and risk.